Lowest in a year home loans. Hey everyone, it's Wolfgang. This is a follow-on to yesterday's video, home prices. So this is about home loans. Good news with home loans. Well, mostly good news, depending on what you were expecting. If you watch yesterday's video, home prices, that set you up very well to get the most out of this video. So let's talk about home loan interest rates, starting with the recent history of home loan rates. Since about 1970, a little over 50 years, the median interest rate on home loans has been 7.3%. 7.3% it sounds high, right? Because over the last 10 plus years, it's been much lower than that. But that's the median since 1970. After the 2008-2009 housing crash, the Federal Reserve lowered long-term interest rates by buying the 10-year U.S. Treasury bond. So what happens is, I've explained this more than once, when the Fed starts buying the 10-year Treasury bond, the interest rate on that bond starts to decline. And since mortgage interest rates are connected to the 10-year Treasury bond interest rates, when the Fed buys the bonds and the interest rates drop, that lowers mortgage rates. So mortgage rates after 2008, 2009 got very low. There's a lot of people, huge number of people out there who are used to, like 2.5%, 3% home loans. That's very unusual. Like I said, 7.3% is the median interest rate since 1970. The Fed lowered rates to near zero by buying the 10-year Treasury after the 2008 and 9 housing crash. Home loans dropped to 2.5% to 3%. 3% was the high side. You could get 2.5% home loans. People got used to that. They thought that was going to continue forever. But that was very unusual, right? 7.3% is the median. In January of 2024, last year, because this is 2025, home loans got up to 7.25%, pretty close to the median. So in January of last year, 7.25% home loans. So that cut a lot of people out of the market. They couldn't qualify for the higher interest rates. So why did home loan interest rates get so high? It's because the Fed raised interest rates. Fed rates got as high as 5.5% by September 2023. So after 2008 and 9, the Fed lowered rates to near zero, but inflation got up to over 9% as of October of 2022. Inflation was very high in 2022. The Fed acted, finally. They started raising rates. Interest rates went from near zero to 5.5% by September of 2023, about 2 years ago. So home loans are usually 2% or more higher than the Fed rate, and that's why interest rates got up to 7.25% last year. 7.25% is about the median, but compared to 2.5 to 3, it sounded high. A lot of people were prevented from buying a home because during inflation, all the prices of almost everything increased, including the price of homes, because the materials used to build the homes increased in price. So let's talk briefly about how people qualify for a home loan. The debt to income ratio is used to figure out if you can afford monthly mortgage payments. So what lenders will do is they'll look at your monthly income, take 31% of that, about 31%, and they will say, is the monthly mortgage payment that much or less? They want to make sure that if they look at 31% of your monthly income, will that allow you to pay the mortgage? If you need more than 31% of your monthly income, generally the bank will not give you the loan. That was happening much more frequently in 2024 when interest rates got to 7.25%. Fewer and fewer people met this standard, met this qualification. 31% of their monthly income was not enough to make loan payments at high interest rate, relatively high, 7.25%. So as vice versa, as home loan interest rates drop below 7.25%, more people can qualify. That's very important. If you watched yesterday's video, home prices, we talked about what happens when more people start being able to qualify for a home loan. As home loan interest rates drop, and they have been dropping, more people can qualify. You can guess what happens. More competition when you're trying to buy a home. So, by the way, some lenders will allow up to 35%, 36% in some cases, debt to income ratio. So some lenders will say, okay, usually we would only let you qualify. We would only allow 31% of your monthly income and try to match that with a mortgage payment. Some lenders will allow 35 to 36%. You have to shop around for that. Okay, so why are low home interest rates good? Well, for obvious reasons. If a home loan becomes cheaper, if the rates drop, because the interest rate determines how high the monthly payment is. As interest rates drop, it becomes easier and easier to qualify to buy a home. But in general, when someone buys a home, they spend more money. They don't just buy the home. They will buy new flooring, new lighting. They will do painting. They'll do some remodeling, perhaps. Not in every case, but in a lot of cases, when people buy a new home, they put money into it to make it more amenable to what they want. All those things, flooring, lighting, painting, remodeling, create jobs. So they buy the home, they start spending money on additional stuff, that creates jobs. The more home sales, the more jobs get created. So as interest rates drop and more people qualify to buy a home, more jobs in the economy get created. That's why low home interest rates are a good thing. Okay? So when will 2.5% home loans return? Okay, because some people are hoping and waiting. They're saying, well, we had 2.5%, 3% rates before, not that long ago. Surely they're going to come back. Won't they come back? Won't we return to low interest rates like that? No. It took this massive housing crash in 2008 and 2009 to make the Fed start buying the 10-year Treasury to lower long-term rates. Unless we have another huge housing crash, we're not going to see 2.5% home loans, okay? 2.5%, 3% home loans are not going to return, okay? The reason I'm making this point is you have to adjust your expectation to what is normal. Normally, 7.3% is the median interest rate in the past 55 years. 7.3%, not 2.5%, 3%, right? That was on the low side. That only happened because the economy really hit the skids in 2008, 2009. So the economy recovered to the point that we had very high inflation, over 9% in 2022 of October, okay? So when will 2.5% home loans return? Probably not in our lifetime. This was a very unusual event, okay? So what are home loans now? This is the good news. Home loans are at lowest in a year. They're pretty low, okay? Home loans have dropped to 6.14% for a 30-year fixed. 30-year fixed rate loan at 6.14%, that's the lowest in a year. Since the end of 2024, we haven't seen rates like this. So for a 15-year fixed, you can get it down in 5.5%, right? 6.14% is for the 30-year loan. So I couldn't fit everything on the board here. This is the lowest rate we've had in a year. So what's going to happen? What will change in the housing market as rates drop? So if you watch yesterday's video, home prices, we talked about this. We said as home loan rates drop, more people can qualify, okay? And that means more people will start buying homes. Yes, in yesterday's video, we said right now there's one buyer for every 3 homes that are being sold. There's 3 sellers for every buyer. So the buyer's in the driver's seat, at least for now. That is changing rapidly. With rates being the lowest in a year, there are going to be more buyers. There will start being an equilibrium between the number of buyers and the number of homes for sale. There will become more competition for homes for sale, especially if you watch yesterday's video, home prices. We talked about areas of the country that have really affordable homes, nice places to live and affordable homes. Okay, so the challenge is, even though rates are low and that's good news, the challenge is there's going to be more competition. There's going to be more home buyers because as interest rates drop, more people qualify and more people will start buying a home. And so you'll be competing with more people than the recent past. I mean, when interest rates hit 7.25%, that really cooled off the housing market. A lot of people could not qualify. They kept renting, okay? But now with rates dropping like this, if 30-year interest rates drop into the 5 range, oh boy, look out, because talk about competition for buying a home, because the median interest rate has been 7.3%. We're below that right now. If it drops to in the 5% range, 5.5 to 5.9% on the 30-year, the home market is really going to take off because people understand that the 2.5 to 3% was an anomaly, artificially low because of the housing crash. With low rates, with rates dropping, if you're thinking about buying a home, you might want to watch that video, for the most recent video, Home Prices, where we talked about where you can find homes for, half the median price that exists in the entire country. Homes for 250, 260 grand. So those are not going to last for very long. As more people qualify for loans, those affordable homes will get bought up quickly. So this might be a good time to start thinking about getting into action and buying a home. If you're a first-time home buyer, you will qualify for 3% down or 5% down. If you're a military first-time home buyer, you can get 0% down payment home loan, right? So this might be a good time to start looking because interest rates are the lowest they've been in a year. Lowest in a year home loans. It's good news for the economy because when people buy a home, they start spending on other things related to the home, which creates jobs. Really good for the economy. We need jobs in the economy right now. Trades jobs in the economy are going to start picking up. So some good news. Interest rates are low. More people will qualify. But the challenge is more people will be competing with buyers to buy a home, especially the lower end affordable homes. If you have any questions about this, please post in the comments. By the way, I'm not a real estate agent. I'm not a mortgage person. Okay. So this has got nothing to do with pitching anyone on, buying a home or getting a home loan. This is the general condition of the home loan market. It's very favorable now. It's gotten more favorable. The most favorable home loan situation in a year, 6.14%. As a public service to help you guys, if you're thinking about buying a home, not to rush into it, but this is a pretty good rate. Could rates fall below that? Yes, they could. If they fall into the 5% range, look out, man, because it's going to be, the lower priced homes are going to be taken. They're going to get bought. They're going to be taken off the market. So if you have any questions, please post questions in the comments. I'd be more than happy to answer any questions you have. I really want to thank everyone for watching. Have a great day.